Hey friends, welcome back to the channel. My name is Sanjay and today we're going to look at 4 ETFs that you can invest in here in Australia where your money is essentially being invested in countries outside of Australia. So this is a great way to get international exposure in your portfolio with an ethical kind of lens and framework to it. So these ETFs would be a great combination to have along with the ETFs that I talked about in my previous video where I looked at 6 ETFs that you can invest in where if you want to focus on just investing within Australian companies. So I'll leave a link to that video at the end of this video, so make sure you do check that out as well. So let's get into it. So the 4 ETFs we're going to be looking at are from Vanguard, BetaShares, BlackRock and VanEck. Now I've listed them here and we'll go through a quick table of comparison, but I do want to call out the challenges associated with actually finding these ETFs, because the way the Australian Stock Exchange lists its ETFs, it doesn't categorize it in terms of ethical, non-ethical, cares about the environment, doesn't care about the environment. You do have to kind of manually find them. So I found these ETFs by looking up words like ethical, sustainable, ESG, conscious, all of that. So it may not be the most collective list, but it's probably a pretty reasonable list to start off with. So when we look at the legendary table of comparison, you see a nice broad brush of ETFs. Now, unlike some of the Australian ETFs, these ETFs have been around for a while. So the oldest has been around since 2016, the iShares product, and then the newest came out 2018, late 2018, the product from Vanguard. Now, in terms of market cap, this is a great way of knowing what do the people of Australia think of these different ETFs in terms of how much money is sitting in there. So on one extreme, you've got BetaShares with over $1 billion. Then on the other extreme, you've got the VanEck product, which has only got $82 million. Bit of a worry why you've got that level of variation, why the VanEck product is struggling, considering it's been around since 2018, it's only got 82 million. Then you've got products like Vanguard that came out 5 minutes after that have over 300 million. Now, it could be that Vanguard's got a much better brand, much better, stronger marketing ability, and that's why they've got more money sitting in there. Also, the simple fact that they've got a much lower fee probably helps. But this whole looking at market cap, I do like to do it because it gives me an idea of, okay, where's the average Australian putting their money? And right now, it looks like it's mainly going into BetaShares at this time. Or it's mainly sitting in BetaShares at this time. So in terms of fees, the variation is typical, is what I would say. It's actually the word now I say is typical. BlackRock, pricing aggressively, 0.09%, shorter than everybody, lower than everybody by a mile. Then you got Vanguard, then you got BetaShares. BetaShares seems to get away with having such a high fee. I don't know why. They did the same thing with the Australian ETFs. They had a very high fee and yet had a lot of money sitting in there. So obviously people who are investing in this particular ETF like BetaShares are comfortable with the fee that they're paying and maybe are more so comfortable with the companies that they're investing in. So useful information to know there. Now, benchmark. This is critical. This defines where your money is actually being invested. So take the time out to read the index methodology. This tells you how they came up with this benchmark. The other thing to look at is the top holdings. That's naturally what you're going to be looking at anyway, is where is the money actually going? When I invest in this company, how will the ETF provider use my money and where will it actually go and invest? So in terms of the number of holdings though, you've got quite a variety. You've got some very broad ETFs like the Vanguard product, which is investing in over 1,000 companies. Then you've got something very narrow like the MSCI or the VanEck product, which is only investing in 82 companies. So an interesting list, interesting variation. I imagine also being 82, there also probably aren't that many countries being included. Again, this is kind of typical. Vanguard, in terms of, they're always very broad. BetaShares is a little bit more narrower, and BlackRock often sits somewhere in between. Now, the thing that I would call out though is, again, BetaShares has come out on top in what I would consider the Sniff Test of what is reasonable to be investing in an ethical way. Because often now in the international forum, the whole idea of ethical investing tends to exclude social media companies. So Facebook gets the knock, Google gets a knock, I guess Twitter would get a knock, but they're rarely in the top 10 companies, so you never see them. But that's a big focus in terms of ethical investing. And you can see when I look at the BetaShares list, at least in the top 10 holdings, there's no Googles, there's no Facebooks, there's nothing to worry about in that sense. But when you look at the iShares product, you can see they do have Alphabet in there. So they've, for whatever reason, they've included Google in there. Even though technically maybe it's not a social media company because it doesn't really have any social media product. Oh, it has YouTube. It has YouTube. Sorry. So it is maybe. But obviously they've included Google, but they haven't included Facebook. And then when we look at Van Eck, they've not included anyone with any kind of technical focus in that sense of social media. So it's interesting, and this is where the trickiness comes into play around, well, okay, how do you know what you're investing in? Because not all ethical and not all social seems to be created equally. So I can understand why the BShares product has so much money in it, over $1 billion, is because when I look at that list, it gives me a reasonable level of comfort that it is being reasonably ethically invested. In terms of, you've got some graphics chips companies. Toyota is in there, but I mean, they got the Prius. It's a very ethical car, I guess you could say. So I guess this is the challenge of ethical investing, is knowing what you're invested in and are you comfortable with it? And you take the good with the bad, possibly. So again, like I did with the focus for Australian companies, is I'll think of 3 or 4 different types of people that I think would be interested in investing ethically and which way they might lean in terms of products, and that might help you decide which types of products you might be interested in investing for these ETFs. So the first one is the price sensitive type of person. You want to invest ethically, but you don't want to pay too much in fees. Naturally, the iShares product is your go-to. 0.09% against all the other ETFs. It's very cheap and I guess to some extent ethical, at least according to them, or socially conscious, or ESG. According to them. Now, the other type of person might be someone who wants to follow the crowd. Now, that would be where's most of the money? And you can see by a long shot, BShares is where most of the money is. Over $1 billion in investing. That one, if you invest there, you're going to be part of the cool kids. You're going to be with the crowd. There's not much to say there, but you are paying a lot in terms of fees. Now, in terms of the broadest ETF list to invest in, you've got the Vanguard Ethically Socially Conscious product, 1,600 companies to invest in. You can't go wrong. Very broad, a lot of countries, a lot of companies to invest in. I imagine there's probably going to be an impact in terms of currency fluctuations, but I'll leave that one with you to figure out. Now, in terms of performance, it is quite easy to compare these because they've been around for a while. So you do have over, a 2-year trend. You do have a bit of variation in terms of their performance. It's difficult to understand performance in these kind of cases because it's such a variation in terms of the companies that they're investing in. You got Vanguard that's investing very broadly, and yet it seems to be doing reasonably similar compared to BetaShares, which is so VSG against ETHI, 34 against 40%, very similar performance. So I'm not sure how you would interpret this. I would say things to consider are obviously this is just capital gains and not total returns. You got to look at the distributions. The other thing I would look at is currency fluctuations. These are all unhedged. So there's going to be a lot of currency fluctuations occurring in here, and that's going to impact your returns as well. So bear that in mind. So as always, make sure you take the time out to read the documentation, look at the holdings, look at all those elements of what you're actually investing in. And please do consider subscribing because my next video will be where I'll look at ETFs that are focused on multi-asset classes and fixed income products like bonds, which I think will be quite interesting. It'll be a little bit boring. Admittedly, it will be boring because who wants to know, who wants to invest in bonds these days? But we'll do those 14 products so you can get an idea of all the different ETFs you can invest in with an ethical focus here in Australia, which has a focus internationally as well. See you in the next video. Bye for now.